Welcome back, everyone. Okay, so today we're going to get started directly into today's course. So it's going to be how you can receive deductions and credits on your taxes. Okay, so if you spent any money on the following, such as marketing and advertising, business meals, insurance, bank fees, vehicle expenses, any form of items that can be depreciated, education, home office, consultants, and contractors, salary, wages, and employment benefits. You're able to get credits for work opportunity tax credits if you spend money on office supplies, tools, and computer software, equipment and furniture, rent, mortgage, and utilities, any type of startup expenses, travel expenses, any form of taxes, any commissions, any machinery and equipment rental, any inventory for service-based businesses, any bad debts, any disaster and theft losses, any carryovers from previous years, any unpaid goods, any cleaning and janitorial expenses, any charitable donations, any movement expenses, intangible like licenses, trademarks, and other intellectual property. You're able to receive research and development tax credits if this applies to your business. And last, you're able to receive deduction for personal expenses such as clothes, hair, shoes, personal hygiene, if it contains for your business. So we're going to get started and jump right in. So marketing and advertising. You can receive a deduction for every expense you pay for, from printing business cards, hiring someone to do your website, purchasing a billboard and ad in a newspaper, paying someone for email marketing, to make business flyers, and the list goes on. They are currently deductible. So as we stated, so anyone that does your website, any type of promotional print material such as business cards, flyers, direct mailers, for anyone who likes to attend pop-up shops, anything that you purchase for pop-up shops, you're able to deduct as an expense as well. And then we also have social media and other digital marketing campaigns, social media ads marketing such as Facebook, Instagram, and Twitter campaigns. You have Google AdWords and pay-per-clicks advertisement that you can also write off as an expense. You have traditional advertising such as TV station commercials if you pay for that, newspapers or magazines, you're able to write off for that. And you're also able to write off startup marketing expenses such as if you pay for a website, any posters and banners, any advertising, and again any business cards. And you would like to keep a log of all your marketing and ad expenses. Next, business meals and entertainment, which is what everyone wants to know. So you can only deduct 50% of your meals and beverages, and it has to be an ordinary and necessary part of carrying on your business. So 50% also if you are providing meals to your team, and meals provided to the office such as office parties, picnics, and events are 100% deductible. So such as entertaining clients, such as concert tickets, golf games, that is 0% deductible if you're entertaining your client. Any business meal with clients, you can receive up to 50%. You can deduct 50% for your business meal with your clients, along with office snacks and meals. You can deduct 50%. Company-wide party, you can deduct 100%. And meals and entertainment included in compensation, again, you can deduct 100%. If this is done at a restaurant, it could be 100% deductible. What's also 100% deductibles are employee meals at a conference beyond the ticket price, treating a few but has to be half of the employees to a meal, food for a board meeting, a meal with the client and work is being discussed, dinner provided for employees that are working late. So if you just want to take your client out to eat just because they decide to purchase a home with you, then you only can charge 50%. But if you're actually going out to eat because you have to discuss, okay, so you have to pay your earnest money, you have to, this is how much you're going to pay for your inspection, and et cetera, that's where you can actually deduct 100%. So you can also have a deduction for insurances such as property insurance, workers' compensation, vehicle insurance, general liability, and casualty insurances. So you can have deductions for bank fees. If you have a business account, you can deduct for bank fees such as monthly maintenance fees, overdraft charges, taxes on transactions, ATM fees, insufficient fund fees, and bank service fees. However, make sure the minimum is limited because you don't want to get flagged by the IRS as being ineligible. You can also have deduction for vehicle expenses such as maintenance, parking, tolls, gas. You can also basically your mileage, you can times that by 58 cents a mile. That's if you have to travel wherever you're going, like back and forth from business to another business, anywhere from home. So I'm going to reference the IRS website for more information about vehicle expenses such as car trading, purchases, etc. So they reference that you may be able to deduct the ordinary and necessary business-related expenses you have for traveling, if you're traveling away from home on temporary assignments, on jobs, going home on your days off, or non-entertainment related meals, which you, like I said, you can do 50% off of that. You can deduct gifts if you decide to send a gift to someone, and you can also deduct off transportation such as air flight, train, Uber, Lyft, etc., etc. For an easier and automated way to log your mileage, download QuickBooks, and it automatically tracks your mileage. And you will want to keep any records for 3 years before disposing them. Okay, so you can also write off, receive a deduction for any depreciated items. If you purchase items such as a desk, chairs, an oven, a Cricut, computer, any form of tangible item that can lose value and have wear and tear over time, you can receive deductions for it. You can't claim any land, any coolant heating unit can't be depreciated. You can receive credits for education. Education such as the course can be deducted, such as my course that you're taking can be deducted. Any course or training you have purchased, books, travel costs to and from your classes, any inventory purchased for the training and educational purposes or expenses. You can't deduct any money you spend on licenses and degrees back in time. So if you graduated in 2016, 17, 18, no, you cannot go back and try to get any money from that. However, if you're in school now, you'll be able to receive that credit and be able to deduct any money that you pay out of pocket for your tuition. There are many different education tax credits such as American Opportunity Credit, the Lifetime Learning Credit, student loan deductions, and more that can be deducted if you are currently in school. And a student loan interest deductions if you have currently, if you were a student in school. So I have attached a tuition statement and what that looked like. So you can also receive deductions for your home office. It has to be regular and exclusive use. You can use your garage, a barn, a studio. You don't have to meet clients, customers, or patients. You'll be able to figure out the percentage by finding out the area, square feet, and dividing it into the total amount of your home. Move the decimal places 2 to the right, and that will be your percentage. And I can give an example. Let me make sure I put an example here. Consultants and contractors, you can pay. You can deduct consultants and contractors such as attorneys, marketing experts, web designers, and other forms of contractors. You can deduct any paid wages for legal and professional fees. If you pay any of these contractors a minimum of $600, then you will need to send them a 1099-NEC, and any other contractor you will send a 1099-MISC. All you do is I will link it down here below. You pull it up, and then how much every money that you paid your contractor, you notate that in box 1, and then all you do is put the actual payer information and everything, and then you'll be able to claim that on your taxes. So any salaries, wages, and employment benefits So if you have to pay your employees, your employees are tax deductible expenses and must be ordinary and necessary within a reasonable amount and has to be paid in the current year. Any other benefits that you provide to your employees, such as meals, lodging, are also tax deductible. You can't deduct any entertainment expenses, transportation reimbursements, parking passes, or life insurance that are given to the employee. You can receive work opportunity tax credits, such as receive special credits for targeted groups that face significant barriers to employment, such as ex-felons. You can receive up to $8,000 per person. Veterans, SNAP, and TANF recipients, you can receive around $2,400 per person. Summer youth employees, and more. To find out more about the different type of credits and their amounts, search the Work Opportunity Tax Credit Program, and you will have to submit a state workforce employment agency web application that can be completed online. So that's just a regular application, and you just fill out your business information, and then once you're able to do that, then you can decide what type of targeted group that you would like to hire, if it's ex-felons, etc. So you can also write off office supplies and computer software. So everything from printer cartridges, Dropbox subscriptions, laptop, paper clips, pens, pencils, postage stamps, postage charges that can be deducted. However, you must ensure that all are for business expenses and not personal. Office supplies can be cleaning and janitorial supplies, storage lockers and fixing cabinets, plastic utensils, paper plates and paper towels, bathroom tissue, beverages for employees in the break room, record keeping supplies such as sale receipts and invoices. Office expenses would be considered as website maintenance, monthly costs for apps such as Dropbox and website services, laptops, desktops, tablets, and iPads, office phone systems such as office phones, and internet hosting fees. All of these are 100% deductible. So next, rent, mortgage, and utilities. Well, a lot of people would like to know. So you can deduct your mortgage interest, electricity bills, cell phone, and rent. If you paid rent, you must send a 1099 MISC to your landlord explaining in box 1 how much rent you have paid. This does not include your security deposit, and if you own the building, you should be filing a depreciation. You can receive deductions on startup expenses up to $5,000, and that you spend the year prior. This includes any advertising and marketing costs, employee paid training. You will calculate all of these under expenses. You can write off costs for forming the LLC, partnership, corporations, including creating a partnership or shareholders agreement, or even registering with the state. You're able to write that off. And you will use Form 4562. You can write off travel expenses. You can take a deduction if you use hotel rooms, rental cars, lifts, cab rides, airfares, phone calls made during the trip, shipping items, dry cleaning, tolls, parking that you paid for. These only can be claimed during the duration occurring longer than 1 business day and required a sleep away from home. You can write off for taxes. You can deduct taxes for all fees and licenses, as well as taxes on any real estate that your business owns. You will deduct all sale taxes that you have collected from the customers. You'll be able to deduct any FICA, state unemployment taxes, and FUTA that you paid on behalf of your employees. And we're almost done, y'all. And you can also write off commissions. Any salesperson you have working for commissions are tax deductible. Any machinery and equipment renting equipment for your business, such as t-shirt, presser, or any form of machinery that is used by renting, can be deducted as expenses without depreciation. You can write off inventory. Inventory normally isn't deductible. However, you can treat some inventories as office supplies, but you will want to consult a tax professional to see if you qualify. You can write off bad debts. If you pay money or an employee without receiving any goods, services, or repayment that you originally paid for, then you'll be able to treat this as a bad debt and as a small business deduction. You can write off disaster and theft losses. Any loss that the insurance did not reimburse you for can be claimed as a small business tax deduction if you were a victim of natural disaster of the year, such as an earthquake, hurricane, winter storm, etc. And you can also write out charitable contributions when you donate, but be sure you are donating to a bona fide chosen charity, 501(c)(3) organization. There are three types of charitable gifts that can be deducted, and that's gifts or property of equipment, that's cash, or travel expenses occur when helping a charitable organization. And then I also have a chart here that shows what is considered a charitable contribution and what is not considered a charitable contribution. And it looks like that is the end of that. So again, I am not a CPA. I am not an attorney. I'm just an average business owner that is helping other business owners keep their money. It's not how much money you make, it's how much money you can keep and not have to pay to the IRS. Because if you don't claim all this money, you probably spend $10,000 to $12,000 in your business a year, and this is where you're able to receive that money back on your taxes. So you want to make sure that you get every buck for your dollar, every dollar's worth, because your business is helping citizens. That's how the government looks at it, and you want to make sure that you treat yourself as such. So if y'all guys have any questions, I will have the form available, and you can also email me if you want a one-on-one. But also, you know that the one-on-one is an upsell, because I am a busy person, but I will be more than happy to help you all. If y'all have any questions, again, speak with all the other students in the class, or you can reach out to me.